The biggest mistake people make over and over again, and I'm going to use Enphase Energy as an example. Enphase Energy is a stock that I think is a great buy, but I'm going to tell you now the mistakes that everybody makes, and it's literally, it is a huge number. I can't say everybody, of course. This stock has been incredibly volatile. You've seen it here. What caused that? Well, you may remember a few years ago, a very big YouTube channel with 2 million subscribers, meet Kevin. He was all over this. He has a lot of influence in this. At the time, he was featuring the products. He was sponsored by them. He was receiving all the products from Enphase Energy, telling everybody it was great. It was very easy to catch a momentum trade because it was at the time we were coming out of COVID. Everybody was buying future Tesla. They were buying all these kind of things, the future of solar, all the rest of it. It's all trending up. Everyone's chasing a trend. Everyone's buying up. No one's buying the value. No one's buying the balance sheet. No one's looking at the numbers. They're just buying something that is getting trended online. People are paid to talk about it, promote it, and all the rest of it. No one, hardly anyone, and I know because lots of people talk to me about this stock all the time, and they say, it's rubbish now, it's going down. It was great once upon a time. Hang on a minute. If you were buying it on the way up, why aren't you buying it on the way down? Has the business changed? And they get the wrong information. They get the wrong timing and they get the wrong information. Let me explain what I mean. Enphase Energy, solar business, is a great business. I know, I have first-hand experience of it. I have it on my house. My house runs for free. I even earn money from the government to have solar. Solar is not a bad thing. Solar is a good thing. However, not every solar business is a good business. Which are the best ones? And what numbers should you be paying attention to? A few moments ago, one of my members, a loyal, decent, quality member who knows about investing, quoted this. He said, how does that compare to PE on Robinhood, which is 26.31? PE, price to earnings, 26.31 for Enphase Energy. This is where people make a big mistake. People look on Robinhood, and Robinhood is great. I love Robinhood, but Robinhood simplifies things. People like simplifying. They like YouTubers who say, buy the dip, dollar cost average, go to the moon. These are nice, simple comic book headlines. You won't hear of these things in an investment course or a university of strategy or in whatever. Yes, Warren Buffett mentions dollar cost averaging, but then he goes into much more detail, but he actually doesn't do it himself. He buys with conviction. So again, it's a nice simple headline. It sells the narrative. So this is important. On Robinhood, they like to simplify things. Let me show you what I mean. If I scroll down here, you can look at Robinhood and it'll say the price to earnings ratio is 26.31. And you go, that's expensive. I'm not buying that. That's more expensive than the S&P 500. And it's a growth stock. And it's expensive even though the price is down. First mistake, you're focusing on an out-of-date lagging indicator. So throw it in the bin. It's rubbish. Investment is about going forward, not looking backwards. So that PE number is rubbish. It's a simple one. It's provided you for free. It's in your face. It's not designed to help you. It's designed to give you just a basic information, and it's basically there to provide the service, because remember, Robinhood isn't giving you financial information to advise you what to do. It's encouraging you to buy and sell shares on their app. It's how they make money. They don't care whether it's up, down, or sideways. They're encouraging you to just trade. That's why they even do all these things now where you can predict and gamble and so on and so forth. That shouldn't even be on the app, in my opinion. It shouldn't be. It's encouraging people just to trade and do stuff. And if they do stuff, they make money. Okay, so they simplify things. Also, it encourages people to focus on the price. The price is also the wrong thing. Because hang on a minute, why is it not a good price now when it was a good price when Meet Kevin was saying buy it at $100 and $200? Price means nothing. People focus on the momentum and then they focus on the price, whether it's positive or negative in this case, and don't understand it. What you should be doing is this, and I can provide you the tools to do it. So the two tools that I'm going to use, one of them I can't give you. One of them is human relationships. I talk to people, CEOs all the time. I understand businesses. I understand hedge fund managers. I understand Wall Street managers. I talk to them. I can't share that with you because that's real human connections. You've got to make your own. Sorry, but the world is the way it is. But I can share with you some software that I use to enable me to look at the real numbers. The real numbers. So I'm going to give you in the chat now, Seeking Alpha and Alpha Spread. You should get these because the Alpha Spread is just a couple of bucks a month. I got a deal with the CEO. I know him personally. So you get a deal so good, it makes my membership for free. And Seeking Alpha can be thousands of dollars, but with my referral, you get a free trial and you get a discount. You can't get either of those without my referral. Just worth letting you know. So, two things. Let me show you a bit of Alpha Spread first of all. The things that people don't focus on. So, first of all, the intrinsic valuation is $76. We're currently at $33, and this is an accurate number today. This is based upon its future earnings. This is important. Where it's going, its current customers, what they're buying right now, what will be in the next earnings call. This is good. No one looks at that. That's not on Robinhood. You've got to dig a little bit deeper for that. You've got to use the software that I'm providing you. Scroll down. Look at revenue. Moving up. We had this when we had this sell-off and when solar lost favor, and now it's steadily moving up. Not much at the moment, but steadily moving up. What about operating income? That is about to explode. Net income, it's about to explode. No one's paying attention to it. Let me show you the balance sheet. The balance sheet. Now, this is important. This company has a very unique margin. What's a margin? A margin is a moat. The moat is around the business. The greater the margin, the greater the profits, the more they can crush the competition. The way Enphase Energy is structured, it's not like most other solar companies. It can survive when there's a downturn. Its margins are very, very high compared to the competition. So despite the downturn, despite the lack of revenue at the moment and the whole industry on a decline, other businesses will go bust. The solar industry will become more focused, and when it takes off again, Enphase will be left and they will boom. This is the very strategy that Warren Buffett employs. He finds businesses that are great, that are undervalued, that are crushing the competition, and they're waiting for their moment in the sun. Okay, the balance sheet. Now, because there's such a downturn, it's not the greatest time for the balance sheet. However, if I show you the competition, other solar businesses, their balance sheets are on the edge of bankruptcy at the moment. But let me show you the balance sheet and what it really means for Enphase Energy. First of all, the gross margin, 48%. Net margin, 11%. The competition are around about the 4 and the 5. So Enphase Energy can sell less. They don't have to worry. They're making money. And the competition go away, especially with interest rates being high. They've got high debts. Enphase don't. They are in a good position. But let me show you this. This is important. The profitability at the moment in a bad downturn is 56%. At 60, we turn green. So they're not making huge money, but they are making money. Other solar businesses are losing money. What about the solvency? Can you buy it knowing it's not going to go bankrupt? Not many solar companies you can buy right now because their solvency score would be low. Our solvency score is 68. 68 is a great solvency score in a downturn. It's a great solvency score. This will go back up to 80 and 90 when we start turning up again. All positive, high interest rate coverage, negative net debt, low DE, and short-term solvency. All good. This business is in a strong position and can remain in business during the downturn. The downside, 14% from here, worst case scenario. We're not in a worst case scenario. Interest rates will be coming down. And when they do, the catalyst will be up. Look, 54% upside on average, 174% forecast on the highest end. Enphase Energy is a good business. And lastly, I'm going to show you the information that led me to make this video. When Keneal said to me, how does that compare to the 26.31, the lagging, pointless, useless indicator that retail investors who buy this stock are focusing on? They are not looking at this one. And this is on Seeking Alpha. You can also do your own calculations, which I like to do off air, but I will share this for you right here. The forward PE is 12.78. 12.78. Look at that, folks. That is half the price of the current S&P 500 in a growth stock that has a good balance sheet. If that is not a buy signal, and this is not financial advice, I'm not telling you to do it, I don't know what is. 12.78. And look at what else we get. We get people that followed Meet Kevin in the momentum trade, buying on the way up when someone is telling you to buy it because they're sponsored to do it. I take no sponsorship from anyone. And look, there's a short interest of 20%. So with all this short pressure, we are also in a short squeeze territory. All we need is one sign from someone to say the solar industry is turning down, and that is interest rates coming down. They will be coming down, and when they come down, this will be a short squeeze, this will fly up, and the stock will go up. So, in answer to Keneal, who said, how does it compare? The lagging indicator is useless. It tells you nothing. It tells you from the last earnings where we were. I am an investor, and I'm looking at where we are going. And where we are going is what is of interest to me, not where we were. So, in my opinion, in my humble opinion, and as Dan Penner would say, there's nothing humble about me. You believe what you believe. You either follow people on YouTube who buy on the way up, and they're sponsored and they're excited and they got all the goods and they're getting paid and all the rest of it. Or you don't focus on price. You don't focus on momentum. You actually focus on the numbers, the balance sheet, what Warren Buffett eats for breakfast, what I eat for breakfast. And in that case, you would conclude, in my humble opinion, and there's nothing humble about me, that PE ratio forward is 12.78. That tells me it's a great buy. The rest is up to you. Not financial advice. I'm not here to pump and dump it. I'm not paid by anyone. I'm not sponsored by anyone. But you got to look at numbers. Take advantage of my referrals. Get yourself some free trials. Learn what balance sheets really mean. Learn what forward indicators really mean, and make informed decisions. Not momentum trades, not hype, not drama. All the links will be below if you're watching on X. For those that are watching on YouTube, I'll put all the links here above my head, down below in the description, and also pinned to the comments. On X, I'll put all these links for you in the description or in the post. But for YouTube, I shall put my Enphase Energy playlist up here, and down here, $1,000 of money I'm going to give away. Why? Because I'm making money and I can afford to give money away. We're giving away $1,000 of XRP live on the show. That's it from me. Thank you very much indeed. Be an informed investor. The rest is up to you. Take care of yourselves and each other.